Wish you all a very happy and a progressive new year. We intend to continue the same growth story as we did in 2023 in 2024 as well. I believe that last quarter, there were some really good number of shareholders, and I really wish them that, whatever responsibilities you have entrusted in us, we continue to work further on that. So before I declare result, what I will do is I'll structure this call for them who have come for the first time, a very short introduction about what exactly we do. Then I will also take you through quick updates of the organization in the last 3 months or, and then, let you know about the results and the rationale behind it, how we have grown. And maybe after these 3 points, we can take Q&A. So just for all to know again that, NPST is into payment technology space, where we have been working relentlessly to build the technology processing engine for payments. We provide the solution to banking industry, wherein, they can do the real-time payments just like, your IMPS, UPI, and the allied services like ODR, online dispute resolution. We have Bharat Bill payment services, and then we also have mobile banking services. So these are some digital products which banks require as on today in order to be digitally present amongst the consumers. And that is what we do. We provide the solution to banks. Beyond this, what we also do is we bridge the gap between banks and fintech by providing the API and the technology solution to fintech on the banking experience that they can get. Now, this is a very unique value proposition which we have brought in the market. By this, what happens is fintechs are able to connect to banking ecosystem, and they are able to derive the value of digital payments for their businesses. So there are companies like payment aggregators, merchant aggregators, those segments where you need a digital payment. They can actually take products and services from us, and they can drive the core value, focus on those areas, and completely outsource the payment requirement to NPST. Now, this is where NPST stands in the industry. Over last 3 months, there are a lot of updates about the organization, and my team has always ensured to bring those updates regularly to everyone. And there are a few things that I want to touch base on. As a commitment towards continuously building the horizontal stack of the organization by bringing in more and more products, we were able to crack our first deal in Bharat Bill payment solution. So we got our first order in last quarter. This particular deal allows us to enter into a completely new segment. It allows us to now reach out to more banks and give them, solution around both license as well as OPEX model, SaaS-based model. This particular solution is, if you look at Bharat Bill payment, this is majorly a biller aggregation at the NPCI end, which can be taken as a service by banks and the other institutions, those who are into providing aggregated bill payment services to customers. Now, this is where we get the first entry in the market. At the same time, we have all continued to grow in our API business, wherein we have added more accounts over last 3 months. At the same time, what we have also done is, I think, last EGM, the results are already out. We have got the approval. We have issued bonus shares in the ratio of 2:1, which means 2 new bonus equity shares will be issued for every 1 existing fully paid up equity share of ₹10 each. At the same time, we have focused on leadership positions in the organization. We have got Mrs. Panchi on board. She comes as an independent director about 27 years of experience, and she will strengthen the organization's, security as well as the overall technology space at the board level. At the same time, we have got, Mrs. Savita Vashisht, who has joined the board as an executive director. She brings, 2 decades of experience in building businesses in software domain, at the same time, the international presence. Beyond leadership position, we have also got, a lot of recognition from the industry. We were honored by Economic Times MSME Award as the top performing Indian listed SME of the year 2023, and we were also honored by Navbharat for our innovation in fintech space. Now all this taken together, we have been obviously it has to reflect on the results of the organization. So December end FY24. I'm just reading out my, the results that has been declared by the organization. I think it's already there on NSE. For everyone to know, we have been able to grow about 210% year on year, which was just about 10.3 crore in Q3 FY23. As a total income of the organization has gone up to about 32 crore in Q3 FY24. At the same time, it's not just about the revenue, but also when you see the EBITDA and the net margin, our EBITDA has grown by about, from 3.4 crore to about 10.9 crore, which was earlier 33.2%. Now it is about 34.24%. Net profit is something that further reflects the non-linear model of the business, which has grown by about 261%. So it's not just about the revenue, about the EBITDA, but also the net margin. If you look at, it has gone from 1.8 crore to about 6.5 crore from the last year. Our earning per share has gone from 2.8 rupees to about 10.11 rupees. Year on year, 261% growth overall. When we consolidate 9 months results for FY24 versus 9 months FY23, our total revenue has gone from 19.7%. Now this is 3 quarter consolidated, from 19.7 crore to about 85.4 crore. And our EBITDA has gone from 5.7 crore to about 28 crore, which is almost about 400% growth. And our net margin stands at 16.69 crore as against 2.68 crore, last year. Again, I think you should be happy about the EPS. The organization number is about 25.83 as against 4.15 last year. I hope this result excites you. And if you really want to understand how this has happened, let me tell you that our consistent focus on bridging the digital divide between banking and fintech world is where we operate. We have been continuously focusing for the last 10 years in building the processing engine. And today we are taking that not just to bank, but also, to the aggregation world. At the same time, we have been blessed with the tremendous increase in the industry, numbers, which has where I think you might have known that in UPI volume now is almost about 11 billion per month. And, the overall trend of the industry, if you look at, you must also understand that the consumer spending pattern is changing tremendously. There are more and more applications which is bringing a habit of online transaction, and people are more confident about the security aspect of the digital payments, thanks to a lot of robust and lot of decisions that were taken at the regulatory side. Furthermore, we are also seeing that there is a huge penetration happening in regional market, where we have offline payment growth coming in from QR, and the similar setup required at the merchant side. All of this, along with our consistent, investment into R&D lab and new product strategy, has been the reason why we have been able to, drive this particular number. I believe that we will continue the same strategy going forward. our focus now will shift towards capacity building of the organization, creating more and more leaders, investing into, capability and skill set, and remain focused on new product and R&D lab. So this is the overall, picture of your organization as on today. I believe this should be good enough to begin with. Kaushal, if you can open the Q&A, I can take it forward.
Yes, sir.
Hello?
Yes, sir.
Yeah.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, kindly note the duration of the call will be for 45 minutes. Our first question is from the line of Pratik Chaudhary from Samarth Capital. Please go ahead.
Yeah, hi, Pratik.
Am I audible, sir?
Yeah.
Hello, sir.
Yeah.
So in the EGM transcript, there is some very interesting comments that were, discussed. Things like non-linear growth into FY25 and beyond were talked about. So could you give us some light into what are the levers where we can see that from, because there are multiple things happening. There's an API rollout roadmap that we have. There is international piece that we are looking at. There is a banking TSP side. So if you could, and there are these new products coming for us, ODR, BBPS. So if you could integrate all of that into our understanding as to where, and you also put that the organization will transform in FY25. So if you could give your thoughts on this.
Pratik, right?
Yes.
Yeah. Sure, Pratik. So let us understand that, we as an organization have taken a lot of effort in building the overall value chain, which is not just between the, building the solution inside banking ecosystem, but how do we take the solution out of banking ecosystem and cater to, merchant and payment aggregators in the market. Now, this is where, non-linear aspect comes into picture, wherein what we are building as an IP around the processing engine, we are able to take that forward in the market. And this has taken almost 2 to 3 years of consistent effort in technology and operations that we have so far invested. Now, when I say non-linear, what we are trying to do is we are creating products, not just remain on services. So although we are on service segment wherein every incremental cost has certain revenue added to it, at the same time we are trying to also focus and shift ourselves towards the product strategy wherein we have built a product once and without having further cost escalation to it, we should be able to generate more revenue on that. That is what I mean by non-linear model. So we should be able to continuously scale that. It happens that over a period of time in the product curve, the revenue per transaction, or I would say, the overall revenue starts going down. Then in that case, you're supposed to keep launching new products and new solutions, and that is what we do. So it is an ever evolving curve wherein, this non-linearity actually pushes the EBITDA and the net margin. That's why you're seeing that the growth is not just coming around revenue, it is also coming around the EBITDA and the margin. That is what it is.
Right. So first thing, if you could talk about our Evoke business and the opportunity size we have. So what was the bifurcation of revenues that we got from Evoke business in this quarter?
See, we split it into 35, 65 odd usually. So all the service business, or I would say the license and SaaS-based model which we have for the banking segment, contributes to about 35% or Ashish, just correct me wherever, numbers are
It's
slightly.
between, you can say 30 to 35%, and Evoke is somewhere about 65 to 70%.
Yeah.
Okay. And sir, where are we in terms of our API rollout? So we have heard about AutoPay, which was there in the transcript for to be rolled out in FY25. What other than that are we?
So technically and operationally, we have to build the stacks. So somewhere technically we are there for AutoPay and payout, and we are in the midst of building the operational capability. This is completely a different stack altogether. Our existing operations capability does not support the as-is model of, AutoPay and payout. So as an organization, we did not consider this difference. Again, we are trying to, make the right use of our knowledge and the industry benchmarking that we are doing. So we are on track, but maybe behind by a month or so, which we should be able to catch up. Somewhere this quarter itself, we should be able to launch it. And like rightly said, we should be able to generate revenue in FY25. No doubt about it.
And this is for both payout as well as AutoPay.
Yeah.
Okay. And in terms of opportunity size, since you said that these are two different stacks, I mean, pay in, which is your current primarily work business, and these other APIs, the next ones being payout and AutoPay. So, is there any is the opportunity size much
yeah,
bigger?
No. So that we are yet to dig further. See, let us understand this. The overall UPI is about 11 billion transactions a month. Almost about 45% odd should be P2M transactions. Now that is the entire industry. Okay. Out of that, there may be certain transactions which would be coming in the aggregation business. We are not the aggregators. We are the technology partner sitting between bank and the payment aggregator, providing them the solution. Now there will be certain portion which we'll be getting. So we estimate that we should be, just about 0.1% of the market share or 0.1 to 1.5% of the market share. It is only with the scale and, overall, wherein we will have to take certain business, decisions and strategic roadmap that will scale further beyond this. When it comes to AutoPay, obviously AutoPay is completely new product which will, which is more of e-NACH nature. Wherein if you see that whenever you go for a subscription-based model, or I think being one of the best example for you all to understand is mutual funds, wherein there are, subscriptions for which you require, products like NACH. Now, this is where AutoPay will start entering this space. So we feel that this is absolutely new area to venture in, but very exciting. And that's why, we have kept the numbers estimated in FY25. We don't want to overcommit this particular quarter.
And so last, we have spoken about cash free. Have we onboarded that as our plan?
No, not yet.
Okay. And in your financial statements, there is a line item by the name of project expenses for almost about 10 crores.
Ashish, you can.
Yeah, Pradeep.
There is a line item project expenses. Can you explain that?
10 crore worth of.
Yeah. It's majorly a expense for Evoke, sharing with bank and other merchants. That's the major nature of this expense. That's a major portion of this expense. Sharing with bank.
Sharing with?
Bank.
That is a Cosmos relationship.
Yeah.
Oh.
There are multiple parties involved into it, so you'll have the overall top line coming in, and there will be cost associated with sharing, and then, third parties involved, merchants and all of that.
Right.
So it's a direct expense without that does
That's
not.
for TSP business.
Huh.
That's for TSP business. We have taken manpower from the third party. That this expense is also covered that part also.
Yeah.
Okay, so it includes TSP part as well, and it includes the payment that we share with the
All.
Cosmos and other partners.
Any kind of direct expenses related to our revenue, it majorly comes under project expenses.
Okay. And in the international piece, any opportunity on the annual? Like you spoke about Asia, Middle East, and have you bid for any countries?
We are investing into these areas, but the cycle is much lengthier, so it will take time, Pratik. We haven't arrived there yet.
Okay. And in the EGM transcript, Bank of Baroda was mentioned, some 6 to 7 large master merchants, even new opportunities for Canara Bank. If you could, talk about.
So I'll explain that. In TSP business, like I said, the sales funnel takes a lot of time, but then it is a very robust and very strong revenue model, which plays in for a very long term. So, as per the approach, what happens is first you should get eligible and empaneled to deliver as per the bank requirement. So we were able to empanel into Bank of Baroda. We were able to empanel into Canara, Bank of Maharashtra, and I think these were 3 banks which I named, which we were able to do so in last quarter. Now, beyond this, as and when the opportunity comes in, we'll go for the bid, and then it will open the opportunity for the organization. And when it comes to 6 to 7 large merchants, like I said earlier in the call itself, that as a whatever businesses we are bringing in, in TSP we were able to add a completely new product altogether, and in Evoke we were able to add the new large merchants.
So for your 3-year vision document that you've been working on, any numbers you could give out as to what is your revenue target you are possibly?
Yeah, I can continue to give the guidance on how you should look at the market. I think if you have gone through transcripts, I have consistently maintained that, you should now start looking at because see, this quarter we were very, and as a management, we were really looking at how this should, pan out. Because what is going to happen now is we are going to work on the higher base, which started from Q3 last year. And that's why I tell everyone that if you see the growth pattern from Q1 of, or I would say Q4 of last year until now, I think you will get average growth rate of the organization, and that is what I have committed so far. I don't want to change any trend for now. Whatever the amount of opportunities or roadmaps that we are building in, we want to first build on it, ensure it's rightly done, and then I can, if at all there are any changes, I will share that with you guys. But for now, it remains the same.
Okay. This also proposed some revenue generation through current account with banks, some model, some product or model that you in the EGM transcript. Okay, sir. In the time pay thing, it speaks of payment system, prepaid instruments, and payment aggregators.
Payment systems? Go ahead. What is the second one?
Prepaid instruments, issue of prepaid instruments, and payment aggregator is what has come out in the presentation today.
I mean, it remains the same. I think when it comes to aggregation, we are providing technology and the overall solutions for them to, operate as a technology partner to them. What we were doing for bank, we have come out and we are doing it for the payment industry, fintech industry. As in when we go further, there will be more and more value-added services that we will keep on adding. And wherever we see the opportunity that, let's say, there is a revenue of, let's say, 1 paise on a particular transaction, which gets added by bringing in, more VAS service. That is what we will be doing. So, in what context are you referring to this? I'm not able to recollect that. If you can maybe give me more detail about this. What do you mean by context?
My understanding was that time pay was, since we are a TPAP, and
Oh, you're referring to the mobile app.
Yeah, the time pay thing.
There is a payer fees that we earn usually. So like I said earlier also, as a mandate, we have to invest into the payer transactions as well as a TPAP, because we are holding the mobile application, which should be operational in market, and that is what we are investing into it. But when we invest into it, there is always an opportunity to generate revenue out of it. And this revenue can be in form of payer fees. It can be in form of bringing in merchant in the ecosystem whenever we bring more users into space. So these are certain areas where we will be generating more revenue when we launch the app as well. But then it will also, require investment into bringing in users in this space. So I think this was related to the TimePay mobile app, if I'm not wrong. So when we do the investment in the app, we also see the opportunity to generate revenue through some other sources.
Okay. No, in the incorporation of the subsidiary slide, where you have incorporated TimePay Digital Infotech, the line says that the subsidiary's goal is to also act as a payment aggregator and issue prepaid instruments.
So I will tell you the use case.
In the sense that would we be going ahead to apply for a license, a payment aggregator license? That's what my question.
No. So I'll tell you what. When there is a need, so when we have not taken that decision. Okay. I'll tell you what happens, like I can say, okay, I've understood what you're asking. So there are more and more ways to generate revenue when you launch a certain product. Again, there are value-added services which can be brought in. So when you're bringing in a user in the application, what happens is like prepaid instrument. So if we are able to tie up with the right party who can actually provide the wallet-based services to the same user base, it actually generates business for them and revenue for us. At the same time, if we are able to tie up with the aggregators, payment aggregators, when we have more and more user base, we are able to generate certain revenue from that sources as well, because we are bringing in business for them. So as a user, since I hold a user base who will be spending through TimePay, there is an opportunity to make money from the merchants and those who will be utilizing our platform to sell their services to the users on the platform. So it can be through prepaid instruments, it can be through payment aggregator.
Sorry to interrupt. Please limit your question to 2 per participant. If you should have a follow-up question, we request you to rejoin the queue. Several participants are waiting. Okay?
Yeah.
Our next question is from the line of Suman from TechFin Consultancy. Please go ahead.
Hello, Suman? Hello?
Hello. Should I go for the next?
Yeah.
Okay. Our next question is from the line of Pranshik Kabre from Advisor LLP. Please go ahead.
Hi, Deepak. Hi, Ashish. First of all, congratulations on a fantastic set of results. It's remarkable how on point you guys are with your guidance, and that's really confidence building for us. So thanks a lot for that.
Thanks, Parikshit. Yeah.
So just a quick data point first. What was the gross transaction value of the Evoke business this quarter?
It's somewhere around 5,000 crores.
5,000 crores. Okay, got it. And just trying to understand the growth here, is it coming because you mentioned that you've added, I don't know the number, maybe you said 3 new customers for the Evoke business. So is the growth primarily coming from existing customers giving us higher volumes or new customers being added?
Both, Parikshit.
It is coming from both Parikshit. New as well as existing. There is an incremental number coming in from the existing, some increment. And at the same time, there are about 6 more accounts that we added last quarter.
6 more accounts. Fantastic.
Yeah.
And so just from our existing customers, since it's an incremental number, I'm just trying to gauge how much depth we have with those customers. Is there a lot of more that we can mine from these customers? Is there a lot more transaction value that they are processing but not sending to us as of now?
Yeah. So that remains the same, Parikshit, no change. So what will happen is not the entire traffic will come to us. There are certain percentage of traffic which will come to us. Now it is very difficult to get that number per account, but for sure, there is still a scope to get more volume from them. But like I earlier said, it will purely depend on the kind of success rate, kind of, tech and the kind of services that we are building over this layer. So it will be a consistent effort to arrive there.
Sure. But I'm guessing that since we are relatively new in this space, these guys would also be, based on our performance, as they gain confidence, will be willing to give us a slightly larger portion of their volumes, right? So are we seeing that kind of confidence building up and that excitement from our customers?
More so, we are getting more and more, insights from them about what are their problem statements exactly. Like, it's not just plain vanilla. Now the industry is not just about plain vanilla payment API, but it's also what more can be done around it. I mean, can I help them identify the challenges in their solution, in their API? Can I give them certain more insight via which they are able to improve their own success rate? So these are certain areas that we are working closely with them. I believe it will take some time because it's not, a basic development, but it's about the entire cycle of problem statement to getting it executed and monitoring. So we will have to see quarter on quarter how we are able to arrive at this.
Great. And lastly, in this time's presentation, you have mentioned, the roadmap for the next year, and you have mentioned 4 different lines, like Super App, Evoke, UPI Switch, and I can't pronounce it, but I'm guessing it's Quinks. So will it be possible for you to break down your growth guidance by these 4 different revenue sources of revenue?
See, if you're going to product specific, I don't think we have so far given that. But for sure, what I can say is that the ratio which we have been able to maintain over last 1 year, that will remain. Like Quinks is part of our TSP stack, which is about providing the merchant acquiring solution to banks so that they can actually compete with, overall fintech space around offline transactions like QR, Soundbox, mobile app, and all of that. Now, this is something which will contribute more and more to the TSP space. So I believe that whatever incremental volume we are getting on the Evoke business, Quinks, BBPS, the more product that we add on TSP space, that will ensure that the ratio remains around 30-35% odd.
Okay, so you're not foreseeing the TPAP versus TSP revenue mix to go towards TPAP more?
Not entirely.
Okay, clear. I'll come back in the queue. Thank you so much.
Thanks, Parikshit.
Thank you. Our next question is from the line of Yashwanti from Gojin Finvest. Thank you. Please go ahead.
Yeah, thank you for the opportunity and congratulations for a great set of numbers. Our margins
Thanks,
are
Yashanti.
improving day by day. That is
Sure.
really very pleasing things. So
Hmm.
I wanted to understand what are the main challenges NPST will be facing in the current scenario, the current market scenario, and how are we addressing this challenge in case
So
of
absolutely. So like I said that, our entire focus earlier in the call, what I mentioned was, and entire focus is going to be on the capability and skill set building, the leadership team, which we need now to diversify and have more and more focused approach towards each of the accounts and each of the products and each of the stack that we're trying to build. So skill sets, your leadership position, and the overall capacity to deliver. These are the most challenging points for us right now internally, which we are working on, and that will remain focused for another at least 3 to 4 quarters. And that is where, I think the first question wherein came in about transformation, this is what the transformation for us is, where we behave more and more of mid-size organization, because now the time has come where we start focusing more on the process, culture, capability, capacity, all of those areas. So this is what we are trying to address right now. Now we are empowered with the existing business to do so and invest into these areas. Second, what we see is from the outside perspective, we perceive that, we believe that although we have the first mover advantage on the areas that we have built, but for sure there will be certain competition which will come in over a period of time. That's why as an organization, we are, looking at consistently on new products, new solutions, new market, which we have, so far addressed, overall questions that I have taken so far.
Okay. Thank you, sir. And one thing is, I just wanted to understand that we recently expanded our team. So whatever the revenue we are seeing, it almost, double from whatever FY23 levels in the first 9 months. So all these employees have been put to operational, or we are still in scope for the full utilization of them?
No. So we are already well utilized, technical and operational, capability of the organization. And now we are looking beyond certain skill sets, as in how do we look at more on the productivity side, how we look at, bringing in more, industry veterans and brains in the organization. So there is a huge scope to, to build in more and more capacity. So I think when it comes to driving numbers, so our existing funnel and the future roadmap is very, I would say as an organization, we are very confident on that. So that will continuously drive our business. And parallelly, it will give us enough space to build these areas. So yeah, our capacity is full. I would say not full, but enough for now to start adding more to the organization.
Okay. And so that we can see in the current content as well as the next quarter. Things will keep adding the people on the talent pool to your concept.
Absolutely.
And are we planning any new business center in other towns where we are currently present in?
We are actually in the midst of scaling our existing offices. So Mumbai, Bangalore, and no, I think Bangalore will take some time more because that was added recently. But Mumbai and Noida will go through complete upgrade. In fact, we have added one more office, a very small sales center in BKC as well now, where, we'll be shifting our sales team and right at the center of the overall actions. So yeah, we are actually upgrading our offices.
That is great. And if I may ask one more question, any product launches in pipeline?
I already mentioned about BBPS. I have already on the TSP side. On API side, I've already mentioned about payout and autopay. Rest, let us wait for, how Q4 turns out. Maybe then I can share furthermore.
Thank you so much, sir, for joining in.
All right.
Thank you. Next question is from the line of Anaya Swaminath from T Square. Please go ahead.
Hi, sir. Congratulations with the numbers.
Thanks, Anaya.
Yeah. So I just have one question. If there are any international expansion plans?
Yeah, we do have, on which as an organization we have invested. Since it's an international territory, we will have to see how our product is designed to be, to be absorbed in international territories. Again, we need to understand that each region is different. Your Middle East, your ASEAN countries, your, African countries. So these are slightly different in nature, but they derive a lot from India's digital landscape. So somewhere in between, we'll have to create the right mix. We are exactly into that process. So it is time consuming, but we are committed to do so. It will not happen immediately.
Okay, so just an idea how much approximate time it would take.
I think that's a difficult question because I don't think we have a benchmark there. But anything as such takes about 12 months or 18 months. Anything which is earlier is a great boost to the organization. So let's wait quarter on quarter. You can keep that question next quarter as well. Let's see where we arrive.
Right, sir. Got it. Thank you. That's it from me, sir.
Thanks.
Thank you. Our next question is from the line of Prakshit from KBT Advisor LLP. Please go ahead.
Hi, Deepak. I'm back. Just wanted to ask a couple more questions. One was on the Bharat Pay. I think, we are obviously quite excited by launching this. I just wanted to understand, is there anyone else who's providing this as a plug and play to third-party applications, or are we going to be the only ones doing so?
Bharat Pay, which one is that?
Bharat Bill Payment, sir. Bharat
Bill Payment. No. So we are not Bharat Bill Payment as a product is well matured in the market, but we were not present in that space. However, now there is a lot of demand coming in industry wherein, all those who have never gone for this particular solution have started asking for it. So it opens up the opportunity for TSPs like us. So we decided to, look at this product very seriously, and we were able to crack one deal last quarter. Now this helps us enter this space, and just like ODR, we have new entry. So what happens is in our business, if you are able to get an account in the banking space, you are an incumbent and then you get an opportunity to do more with the same account. That is how we see that, BBPS will allow us that entry in new accounts. So it opens more avenue for the organization.
Got it. And next, okay, now I'm going to first make an assumption is that the TPAP business for us currently is the higher margin business compared to the TSP business. I could be wrong. But if you've given us a very strong revenue guidance, what should we expect in terms of margins going forward?
Okay, now that's a very good question. We need to understand that when I say that our focus will remain on capacity and capability building and bringing in more and more leaders in the organization, we personally feel that now we have to start looking at it from the long-term perspective to build a larger organization. For that, this particular decision will take the extremely incremental margin which we may get from the non-linear model. In that case, I would say that, we will continue to deliver on the similar margins. However, beyond this, the overall growth strategy and so what has happened is we've also seen that there is a lot of cumulative decisions organization has taken over last few quarters. So it is not just about the incremental accounts, but also about incremental product stack. Now, all those will help us to invest into these areas. So I believe that our margin will remain at the same level, going forward, and whatever incremental margin we'll have, that we will be able to spend into capacity and leadership positions.
Got it. Perfect. Makes sense. And lastly, I know this question was already asked in terms of, what kind of gross transactions we may be expecting from the new APIs that we're launching, and you said that it's too early to tell. But in terms of interest, do we already have some customers waiting for us to product launch this, and they're already ready to sign up, or after we build it, then we will go into the market and fish?
So we are already in the POC stage right now. So there are some customers with whom we are working directly.
Okay, got it. Perfect. All right, thank you. Thanks a lot, Deepak.
Thanks. Yeah.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Kaushal Shinde for closing comments.
Everyone for joining the conference call of NPST Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference.
Thanks everyone.
On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and now you may disconnect your lines.